Hi, everyone. Mike Riley here with you today, and I'm really excited to bring this topic to you. It's something I don't cover a lot of, and it's disability insurance versus group long term disability. And this is a real success story for one of my clients. So I'm going to use this as an example. I've simplified the numbers a little bit just for the math, for the purposes of presentation. If you'd like to know more detail behind this and how this situation might affect you, please let me know. I'm happy to take a personal call or a meeting and work through the numbers. So when I do risk assessments with clients, one of the questions that we always cover off is, do you have a group benefits plan that includes long-term disability? Many people are fortunate enough to have that. And if so, in many cases, the long-term disability that's provided is sufficient, but only up to a certain point. And I'm going to talk about why that is, because group disability plans are essentially there as a safety net, but it's really bare bones for a couple of reasons. But it's a good idea to assess it on an annual basis because your needs change over time as you advance in your career, but very often the group benefit plan does not move along with you. So I apologize in advance. I may refer to my notes a little bit to make sure that I'm covering everything off. So in this particular example, I had a client who I first started meeting and working with when she was 27, and she got a job at a company in a sort of a supervisory clerical role. And at that time, when she was 27, she was earning $25 an hour. So that's on average $4,000 a month. So on her group benefits plan, she was entitled to um, her her income replacement, which is her take home after tax income replacement for a period of 2 years. And the group benefits plan had a maximum of $3,000 per month of coverage. So anything up to $3,000 is what an employee could take home. So in doing a comparison, we tried to figure out whether that was going to be sufficient for her. So at $25 a month and $4,000, assuming a marginal tax rate of 29.7%, her income replacement would have been $2,812. That's what her long-term disability would have covered off so that she was able to stay home, seek treatment, get better, come back to work again. If she didn't have a group benefits plan and had personal insurance, disability insurance, it would have covered 70% of her gross income, which would have been $2,800. So right there, it didn't make sense for this client to take out her own disability insurance plan because the group plan that she was already paying for through work with part of a income withholding on her monthly payment would have been better anyway. So fast forward to it was 4 years later, and she's a good employee. She's taken good ownership over her role, and her income is now increased to $30 a month. So that's $30 an hour, and $4,800 a month. So under her group benefit plan, her take home pay would actually be $3,374 a month. But remember what I said was that there was a monthly max of 3,000. So all she would be entitled to would be $3,000, even though her after-tax take-home pay was $374. So what we need to do is then look at what would a group benefit plan be. So a group benefit plan, as I said, is 70% of her $4,800 amount. She would be entitled to $3,360 on a group benefit plan. So right away, the group benefit plan is a better option for her. Now, I'm not saying that we replace the group benefits plan at all. In fact, the group benefits plan is terrific, and here's why it actually becomes a really good program. Because if she were to apply for a disability insurance on her own, the only thing that the insurance company has to look at is this top up to 3,360. So that's just this amount right here, which I would call the danger zone. This is where she's now underinsured because my client, like most people, as they've earned more money, their income has started to, or their expensive has reached, their lifestyle has become a little bit better. It'd be very difficult for her to actually live on just the $3,000. So the insurance company is going to top that up with $360. And the great thing about that is the premium is only based upon that. The insurance company knows that the group benefit plan is the first payer on that. So the premiums are based on just having to provide an additional 360. So my recommendation was that we absolutely should apply for a disability insurance benefit for that. So the second part of this is this 2-year maximum. So what that's called is any occupation or any OCC. And what that means is that for the first 2 years of her group benefit disability, if she can't perform the basic duties and functions of her own occupation, that is her specific skill set, then she's entitled to the benefit. At the end of that 2 years, if she can do any occupation, that is, if you can get off the couch and you can go to a place of work and sit in a chair and be a toll booth instructor, or if you can pick up a broom and sweep floors, you're expected to take that, and you are no longer eligible for your group benefit. So even if she couldn't be a supervisor in the same type of clerical role, if she could do anything, she's off her benefit. But most people would like to have similar work that they're used to. They don't want to go to a job that they're more than qualified or overqualified for, just because they've suffered from some type of an injury, illness, or depression and anxiety is also included in this. So what we looked at was increasing with her disability out to 5 years. So we're going to cover off an additional 3 years of the group benefit plan with her own disability insurance. So again, the same situation, if we were to just go and get a straight disability insurance plan for that covered off her income for a period of 5 years, it would be much more expensive in premiums than it would be if it was already set up with a group benefit plan along with that. And the third thing that was important for this client was that because she is doing well in her job and increasing her income, we also added what's called a future earning protection option, or FEPO for short. And what that allows is for her to be able to purchase additional insurance over a period of time as her income starts to increase. So even while she's not on a disability program, that is, she's not disabled at the time, every year or so, the insurance company will say, would you like to buy an additional $200 a month benefit of insurance that goes along with that? So as her income increases, say she becomes disabled here and she's now entitled to 3,500, she can actually have that, because if we stuck with the initial one, she would only be getting 3360 on that. So the future earning protection also protects her ability to earn and save in the future. So I was really excited for her. It was an easy underwriting to do. It's actually a little simpler because there's already that group benefits plan. The insurance company's not taking on that much risk, and her insurance coverage is going to grow with her career. So if you'd like to know more details about this, if you'd like to know, maybe does your group benefit plan work like this? And if so, are you relying too much on it? And are you putting yourself and your family at risk by only having a group benefits plan? Please let me know. You can contact me through the information here on the YouTube site, or if you're watching this on Facebook, you can get to me that way as well. So thank you very much. I hope this has been instructive for you. And thank you very much, Mike Riley with Freedom 55 Financial, helping you gain altitude and gain confidence.